The advantages of investing in cryptocurrency. Cryptocurrency can be a useful method to diversify your investment portfolio and distribute your risk across a few different asset classes, even with the inherent hazards that come with investing in it. Because there is a finite number of coins that can be mined, unlike regular currency controlled by the central bank that experiences regular increases and decreases in supply, although some experts claim this has changed over time, some investors view cryptocurrencies like Bitcoin as a valuable hedge against inflation. Here are some advantages. 1. Simple transactions. Cryptocurrency transactions are simple, typically inexpensive, and fairly confidential. A wide range of cryptocurrencies can be sent and received by nearly anyone using a smartphone app, hardware wallet, or exchange wallet. At a Bitcoin ATM, you can pay cash for several cryptocurrencies including Bitcoin, Litecoin, and Ethereum. Cryptocurrency doesn't always require a bank account, so it's feasible for someone to purchase Bitcoin at an ATM with cash before sending the money to their phone or digital wallet. For those who might not have access to the conventional banking system, this could be a significant benefit. 2. Generally safe. Decentralized cryptocurrencies often function as secure payment methods because they are based on cryptography and blockchain security. As a result, one of the main advantages for users may be the relative security of cryptos. Hash rate is a key factor in cryptography security. More computer power is needed to breach the network the higher the hash rate. Due to its tendency to have a greater hash rate than other networks, Bitcoin is regarded as the most secure cryptocurrency. But keep in mind that the security of a crypto exchange depends on the exchange itself. The majority of cryptocurrency hacking incidents involve compromised exchanges or user error, such as falling for phishing scams. 3. Rapid settlement and affordable fees. Others may benefit from the capacity to utilize cryptocurrencies as a medium of exchange, while some investors may just desire to purchase cryptocurrencies to profit from potential price growth. Transactions involving Bitcoin and Ether can cost anywhere from a few cents to several dollars or more. It's possible to send other cryptocurrencies like Litecoin, XRP, and others for less money. Most cryptocurrency payments settle in minutes, and some even in milliseconds. In contrast, bank wire transfers can be significantly more expensive and frequently take 3 to 5 business days to complete. 4. The prospect of exorbitant returns. One of the best performing assets over the past 13 years has been Bitcoin. Bitcoin practically had no value when it first appeared in 2009, but in the years that followed, it would increase to a fraction of a penny, and then finally to tens of thousands of dollars. Gains in the millions of percentage points are represented by this. In contrast, the average annual return on the S&P 500 stock index is roughly 8%. Although several of currencies afterwards witnessed price collapses, certain altcoins have outperformed Bitcoin by significant margins. These perks may be among the most well-known advantages of cryptocurrencies. The losses, on the other hand, can be one of the disadvantages with the best reputation. And it's crucial to remember that because cryptocurrency prices have just dropped significantly. For instance, as of September 2022, the price of Bitcoin has decreased by more than 60%. Prices in the cryptocurrency market have exhibited this kind of volatility, which has been a key advantage of cryptocurrencies for day traders and speculators alike. Trading can generate profits even when prices decline by taking advantage of price variations. 5. Diversification of holdings. The asset class of cryptocurrencies is currently recognized as being uncorrelated. Theoretically, cryptocurrency markets operate mostly independently of other markets, and the factors that influence their price movement typically differ from those that influence equities, bonds, and commodities. Although that premise has been put to the test this year as all kinds of assets, including cryptocurrencies, have fallen in value. But it's important to keep in mind that during the past few years, cryptos have started to sporadically trade alongside stocks for brief periods of time. Therefore, in terms of diversification, cryptocurrencies give investors an additional tool to attempt to grow their money aside from stocks, ETFs, or bonds. Although cryptocurrency has its own distinct hazards, it offers an additional source of potential returns for investors. 6. Possibility of inflation hedge. Bitcoin, Litecoin, and Monero, to mention a few, are just a few examples of mineable cryptocurrencies with a finite supply ceiling that have historically been considered to be effective inflation hedges. Things that are more scarce tend to increase in value because monetary inflation can happen when central banks and governments generate more money, raising the supply. The price of these fixed supply coins, measured in dollars, has a larger likelihood of increasing as more and more fresh dollars compete with fewer and fewer coins. In addition, the Bitcoin protocol, for instance, is made to maintain the scarcity of those coins regardless of changes in monetary policy. Since this year has seen higher rates of inflation than in many decades, the ability of cryptocurrencies to resist inflation has yet again been put to the test. As previously said, crypto prices have decreased, but it's difficult to determine how much of that is due to inflation. Crypto may still act as a hedge, but the idea may no longer be as solid as it once was. 7. Optional transactions. Cryptocurrency's ability to be utilized as a means of value exchange between two parties is one of its many advantages. The transaction can be completed without the involvement of a third party, making it as cost-free as it can be. It's comparable to giving a friend on the street a dollar bill. Anybody's services can be terminated by banks or other payment processors at any time and for any cause. For certain journalists, political dissidents, or other people operating in countries with oppressive government regimes, this might make things challenging. It's exceedingly challenging to prevent anyone from using Bitcoin or the majority of other cryptocurrencies because there is no central authority controlling them. 8. Constantly open markets. The New York Stock Exchange, NYSE, and other stock exchanges are only open on weekdays from 9:30 a.m. to 4:30 p.m. Eastern Time. The majority of traditional financial markets are closed at night, on weekends, and on holidays. On the other hand, cryptocurrency markets are open every day of the week, 24 hours a day. The only things that may prevent someone from trading cryptocurrencies would be a power outage, an internet problem, or a failure of a centralized exchange. 9. Flexibility. Some cryptocurrency projects make efforts to improve their resource usage or efficiency. That marks a significant departure from, say, the conventional banking system, which is frequently constrained to using antiquated technologies and procedures. As an illustration, consider the merge, in which Ethereum switched from a proof-of-work paradigm to a proof-of-stake model, thereby halting mining activities and replacing them with a considerably more effective operational model. Another benefit that cryptos have over conventional systems is their capacity to significantly and broadly alter the way things operate.